concern over earnings. Obviously, right now we're getting a good cyclical up.
So hi, hope you're well. So let's get started.
Is there macro concerns overlaying this that might make
sorry there was news running? Bitcoin has been up. It's been a good day. So on the stocks and shares, yesterday was big tech earning. So let me put this off.
In some senses, does help.
I think that's okay. So as I was saying, yesterday was big tech earning. It was quite an eventful day. So Facebook was up with 37% revenue growth, so which is quite high. So let's just say technically we are doing very well. Very well, I can say, because now the boom is here. Boom means the bull trend, because now the demand is very high. Oil is also very high. So today I'll talk a little bit about Fibonacci trading. So give me a few, I get my notes ready. Then I share my screen. So share screen. Yeah, so I think that's okay. So today's lesson will be mostly more of Fibonacci sequence. I'll just explain, to be a short minute video. So I'll just explain how it works. And then practically I'll show you how it is applied in the market. So I have my chart here. I have Euro USD. This is on 1 hour chart and also on 30-minute chart. So I'll be just drawing the Fibonacci on both. Then at least we can be able to relate. So just a minute. Put this down. So today is more of a practical session. In case you have questions, we can ask, because I'll just be explaining how Fibo works. So let's just go directly to our notes. So 1 minute, I get the notes ready. So this is one of the most important topics, I may say, because you have to really understand how Fibo works. Fibo is one of the very important, just a minute, very important tools to use for trade. So then we go to the guy who came up with the whole thing, or discovered Fibonacci. So give me a minute. I think that's okay. So the guy is called Leonardo Fibonacci. Yeah, welcome. So let me just go to how Fibonacci works, where it came from, and then now we'll apply it to our chart. So my chart is here ready. So let's first go to 1 minute. Just a minute. My net seems to be slugging. Oh, we are here. Yeah, Fibonacci. So this is a very important tool of trade, because it applies almost to everything, including yourself, your life. I'm going to show you how Fibonacci applies, because without Fibonacci, I don't know if it could be what we could be doing, but it's a very important tool of trade. So I gave you last class, I gave you Japanese candlesticks, I think, moving averages also. I gave you a video. So now we're going to be combining those with Fibonacci trading. So what is Fibonacci? These are ratios. They are ratios that we use in trading a lot in our trading. So you better learn it and love it like your mother's home cooking. So we will have things we call retracement and extension. So it's a huge subject, and there are many Fibonacci studies with weird sounding names, but we are going to stick with two: retracement and extension. So let's first introduce the guy himself. He's called Leonardo Fibonacci. So this is the guy. He was a famous Italian mathematician, also known as a super duper ultra geek. So this guy was a geek, means he was very idle. Meaning he is the one who discovered this an aha moment. Now is your eureka moment, where you have this invention, then you're like, wow. So this moment was, he was describing the natural proportion of things in the universe. For example, everything is connected to everything. That means from nature, the food we eat, somehow everything is connected, the universe. And this was basically what Leonardo, what is his name? Leonardo Fibonacci, because now it's named after him. This is where it came from. So just follow through. I hope you have your calc with you. Let me get mine ready. So we'll be doing a little math. So the ratios arise from the following number series. So have your calculator with you where you are. So we have 1, 0, 1, 1, 0, 1, 1, 2, 3, 5, 8, and so forth, 8, 13. How do we go this? This is a series of number is derived from by 0 followed by 1 and then adding 0 plus 1 to get the that number. So 0 plus 1, 0 plus 1, get 1. 1 plus 1, you get 2. 1 plus 2, you get 3. 2 plus 3, you get 5. 5 plus 8, you get 13. 8 plus 13, 21, and so forth and so forth. So then, after the first sequence of, after the first few numbers in the sequence, if you measure the ratio of any number, the succeeding higher, you get 0.618. So this is the most important part. I want you to follow through. So we still have our numbers here. So we get 34 divided by 55. So you get 34 divided by 55, you're going to get 0.618. Then you get 55 divided by 89. You get 55 divided by 89, you get 0.618. Then you get 89 divided by 144. You get 0.618 and so forth and so forth. And then if you measure the ratio between the alternate numbers, now here we have the alternate numbers, you get 0.382. For example, that 4 divided by 89. Now you're going to you skip one here. So we say 34 divided by 89. You get 0.38. You also get 55 divided by 144, 0.38. I can go back, 8 divided by 21, 0.38, and so forth and so forth. So you see, this guy was a genius. How he discovered this, I don't know. So before we go, I just wanted to, let's have a history of him. This is the guy. He looks like this. This is his face. And it was some time back. Let's have a look at a little Wikipedia. So 1 minute. So yeah, so this was the guy. So Fibonacci 1170. So this was quite some time back. Let's see how far back. 1170 minus, it's almost 800 years ago. Wow, over 8 centuries ago. So known as Leonardo Bonacci, Leonardo of Pisa, or Leonardo Piccolo Pisano. He was a traveler from Pisa. He was an Italian mathematician from the Republic of Pisa, considered to be the most talented Western mathematician of the Middle Ages. So this guy was a geek math guy. The name is commonly called Fibonacci, was made up in 1838 by Franco-Italian historian, and is also for Philas Bonacci, or the son of Bonacci. However, even earlier in 1506, a notary of the Holy Roman Empire, Perizos Benioso, he popularized the Hindu-Arabic numeral system in the Western world, primarily through his composition to Liber Abaci, Book of Calculation, and also introduced Europe to the sequence of Fibonacci numbers. So that's basically a little bit about him. They also did, I think, a sculpture. So at least we have a look. So let's go back to now the golden ratio. So that now I show you how it's applied even in nature. So let's first finish with the theory, then I'm going to touch on the practical. So then we go to the, just a minute. Yeah, here. So you just experience, you have now just experienced the Fibonacci squeeze sequence. So I think we have been able to understand how 0.618 and 0.382 comes. Then Fibonacci ratio sequence looks like this. It's like a spiral. So anywhere in nature you'll see something that looks like a spiral, something closer to this. That is our Fibonacci sequence. And I'm going to show you that golden ratio in nature. So a Fibonacci sequence is formed by taking two numbers, any two numbers, and adding them together to form a third number. Then the second and third number added again to form the fourth number. I hope you got that. And you can continue this until it's no longer fun. Then the ratio of the last number over the second to the last is approximately equal to 1.618. We have seen that. This ratio can also be found in the natural object. So this is also called the golden ratio. So this is the golden ratio I want to be showing you guys. And it appears in geometry, art, architecture, and even in the sonic hedgehog. So let's have a look at it on images on Google. So I think let's have a look at the golden ratio. Then now we are going to apply it to our market. So the rose flower, you can see there's a spiral kind of. So this is the golden ratio. Cauliflower, I think this is the one the bees use. You get it there. You can see so many places. Let me put here so that at least you can be able to see. So you can see even our galaxy. You can see the shell. This is the Fibonacci sequence. It looks like this. You can see there are so many. Even this flower, I don't remember the name. All these are Fibonacci sequence. Even this one, the white flower. So all of this, can you see? Anywhere you're seeing something like looks like a spiralish, is even our face, from our nose to even our ears. Look at the shell, Mona Lisa here. You look even our ear. Look at our ear, from where our ear is, from how it's formed. This is from our nose also, even our face. We have the Fibonacci sequence. So it's a beautiful thing. The sun, how it's rising, you see. Oh, there's so many places. Can you see even the egg also, and all over and all over. So even the black holes, for those guys who love space, you hear about black holes, you see it. Even for, yeah, this is even the clouds. It's so much. Yeah, the galaxy, you can see. So just right there, golden ratio in nature, and then on you'll be able to see all the places it applies to. So you can see all this is the golden ratio. Even the tiger here, the chameleon, the tail, the way it looks like, even your thumb, your DNA, look at it, look in the red line. It's the Fibonacci sequence, I mean the golden ratio. So much everywhere. Even the stairs, you've seen buildings that look like this. Those buildings that looks like this, that's also the Fibonacci sequence. You can see, can you see even the water here. So even the dog, you can see all over. So anyway, let me not touch much. Sonic Hedgehog and the rest. So this golden ratio is actually an irrational number like pi, and is often denoted by Greek letter pi. Okay, so with all those numbers, let's put the elephant to sleep and cut to the chase. So this is what we have to know when we are coming to our trading. So when we are doing our trading, all we need to know are retracement levels and extension levels, because this is what mostly we'll be using to be able to understand how our market work, be able to see where we are entering and getting out, and also taking profit, of course. So Fibonacci extension levels, 0.3, you start with 0, then 0.382, 0.6181, 1.382, 1.618, and so forth. Retracements is 0.236, 0.382, 0.618, and 0.764. You won't really need to know how to calculate all this. The charting software will do it for you. However, it's always good to be familiar with the basic theory behind the indicator. So you'll have to, we have the knowledge to impress your date. So Fibonacci retracement levels work on the theory that after a big price moves in one direction, the price will retrace or return partway back to a previous price level before resuming the original direction. And traders use the Fibonacci retracement levels as support and resistance area. So mostly we are looking at Fibonacci levels as support and resistance area. So since so many traders watch the same levels and place buy and sell orders to enter trades or stops, support and resistance levels become self-fulfilling prophecy. And then we also use Fibonacci to be able to take profit. So what I love so much about Fibonacci is you can be able to take profit. So again, so many traders are watching to place buy and sells. This tends to work more than not due to self-fulfilling expectations. In order to apply these two levels to your chart, you need to identify swing high and swing low points. So the first thing we need to get is our swing high and swing low. So let's go to the charts and see how we use them. So I'm just going to show you, let's finish on the theory. It's almost, so Fibonacci retracement levels are horizontal lines that indicate the possible support and resistance levels where price could potentially reverse direction. That's very, very important to note. The first thing you need to know about the tool is that it works best when the market is trending. So the idea is to go long. Going long means we are buying on a retracement at a Fibonacci support level when the market is trending up. And to go short, or we are going to sell on a retracement at a Fibonacci resistance level when the market is trending down. So these levels are considered a predictive technical indicator, since they attempt to identify where the price may be in future. So the idea with the markets, we need to know the history, the now, and the future. We're just trying to predict where will the price be going. So the theory is that after price begins a new direction, the price will retrace or return partway to a previous price level before resuming in the direction of its trend. In order to find these Fibonacci retracement levels, you have to find the recent significant swing highs and swing lows. And then for downtrends, click on the swing high and drag the cursor to the most recent swing low. So let's have a look. So you can see this is swing high, swing low. Then so you'll see the charting software will do it for you. So so you can see this is an example. So 38, 50, 0.618, 76, 1, 0 is here. So now 38 became this was the level that 38.2, the Fibo held. So you can see the price was trying to come down, but was held, but went back up. So that's one case scenario. Swing high, swing low. You can see 50 became our level that was held. So try to break them. So here we would have short, we'd have sold and made some really good money here on this 4-hour chart. So that is, so let's say they are not foolproof, number one. So the reason is, this is one tool in a toolbox. So the idea is we combine this tool with other tools. You can see, looks like 50 was holding, but you can see what happened. Holding, then what happened? It broke because you can see it was retested 1, 2, 3, 4 times. Then the price did what? Went up. So this is just more theoretical because I'll be showing you practically. I'm just going through the theory. So let's see how you use Fibonacci with support and resistance. So how do you use Fibonacci retracement with support and resistance? So this is one. So swing high, swing low again. And then so this became our strong tested support. How do we identify the tested support? Is because it has to be tested by many candles very many times. You can see this is 1, 2, 3, 4, even here. But here now, when it was going up, it was our resistance. But now became what? Support. Now, this was which level? Around 50. And you can see exactly what happened. The price did what? Started going up. So with traders looking at the same support and resistance levels, there's a good chance that there are a ton of orders that are at those price levels. Remember, it's all about probabilities. We can also use Fibonacci with trend lines. So they really work well. Let's have a look. You can also use them with trend lines. Another good tool to combine Fibonacci is using the trend line analysis. So you can see our beautiful trend here. Then now what was holding around 50? Was it 50? No, 61.8. And you can see within the trend line, the trend was going up, touch again and did what? Bounce back up. So then how to use it with candlesticks. So I remember I've already touched trend lines and candlesticks. So you can come now, we are combining Fibonacci with those two tools. So you can see this was a very strong downtrend, swing high, swing low, downtrend. So now we need to know how far, where. So you can see there's a bullish green candle, means, but you have to wait for the candle to be done. So you can see it looks like a doji. So doji means is an indecision. So most likely this buy trend might be almost reversing, and it's exactly what it did, it reversed. So we also use it, when do we take profit? So now number one, today I'm showing you how to take profit. Very, very easy. If you don't want to trend, if you are day trading, it's very easy for you to take profit. So you can see you could have taken your profit here, could have taken your profit here, here, and here. Take profit 1, 2, and 3. So here, if you are going down, you could have taken profit where? Let's have a look. Here, here, and here. You can also use it to place your stop loss. So we don't want to lose money. So let me show you where you use Fibonacci to place your stop loss. At the next, so this would have been a good place. Remember, this was the doji that formed. So just above the next retracement or extension, you can place your stop loss around up here. And then you can see you can also place it up there just in case there are spikes, but at least always make sure 30, 40, 50 pip. If you have to day trade, at least you need a 30, 40 pip stop loss. So let's do the summary. Then at least now I show you the practical application. So So we have come to review. Let's review what we have learned about Fibonacci. Fibonacci retracement, the levels to keep an eye on. They are 23.6, 38.2, 50.0, 61.8, and 76.4. Sorry. So the levels that seem to hold the most weight are 38.2, 50.0, and 61.1. So, and I think I've been able to draw for you. We have also seen how it's, applied as the golden ratio in nature. So I think I touched that. So these are the three most important fib levels: 38.2, 50.0, and 61.8. And because these levels tend to be closely watched by many forex traders, the support and resistance levels become a self-fulfilling prophecy. So the traders will use extension levels as support and resistance. So three things we have learned today. Fibonacci, we are using them as potential support or resistance levels. We're also using them to take profits and also set our stop loss. So they can often become the end of the trend move due to the self-fulfilling expectation. So all you need to understand is to know where you're placing your swing high and swing low. So let's use the fibs. Let's draw the fibs on our chart now. So this becomes my chart on Euro USD as at the moment. So the tool is here. So Control G, you remove the grids. You can see. So now let's draw our fib levels. So I need a bigger space. Just a minute. So this is on 1 hour chart. So number one, I need to identify my swing high, swing low. So I usually go to my date, 13th October. So when is today's date? So that I'm able to know up to how far am I drawing my fib. So today is 26th. So that's a week. So I need around 30 days. 7th October. 15th September. I think that's better. No, because this has been going down, so I'll have to zoom in. There, up to 7th October. Yes, that's okay. So let's draw our fib on this one. So your tool will find it here. So you click on it. So I need my swing high and swing low. So this seems to be my swing low, and this seems to be my swing high. There. So that's how you draw it. You can see now 0, 23, 38, 50, 61, and 100. So you can see exactly what the price was doing. It was going up. 61 became my strong resistance. Then it came down again back to 100. Then went up all the way, was testing 50 a little bit, then broke 50. You can see this candle broke 50. Then 38 now became my resistance. Then what did it start doing? Just a minute. Started going down again. Then you can see it was within 50. So 50 is a very important mark. You can see even right now where the price is, it's at 50. So 50 now here, when it's going down, doing this becomes my strong, very, very strong support here. Goes up again, comes down. Now what is it doing? It's retesting. So this area was our consolidation area. Why? Because it's touching either 38 going back to 61, 38, 61, or 50. Then now finally it broke for 38 and went all the way now to 0. Then came back up 23. Again, consolidation, you can see consolidation. Then now it went down back to what? So you can see here would have been a very good buying opportunity around this area, especially when this moving average or when it was above. This is my moving average 50. My moving average 50 is basically telling me when the candles are above, we are trending up. When the candles are below, we are trending below. You can see when the market was falling. I can even zoom it out all the way. So you can see moving average 50, we have my zone here. So this was a very good sell. You could have made a lot of money selling from down here, and we could have made an extra almost 300 pips. So anyway, let's go back to our day trade. So day trade looks like this. So I can also draw something we call confluences and coalesces. It means I can draw a fib on H4 to be able to see. Now that's my H4. This is for swingers now. So I need to go the way to 11th August because I just need to see when the sale started happening. I think That is since 20. No, I don't need to go to June. Let's zoom in just once. There. Up to 11th August. So let's draw the fib here. Swing high again. And swing low. But this one is for the swingers. All the way there. So that at least we see where we are on H4. Or I think that's okay. Just a minute. It has to be above. Yes, there. So I think that's okay. Then now we move it. So let's look at H4, this one. Where is the price? Just a minute. So on H1 we were at 50, and then I think on H4 we are at 38, yeah, around there. So why did I draw that? All I need to know is where am I? So where am I means I'm around 50. So I think the H1 will work better for now, because what we need, we want to take like 20, 30 pips. So let me remove this one for H4. The latest one. Just a minute. There we go. So let's go back to H1, yeah, here. So there we are. So now the idea with fibs, now 50, just look at how many times it's been retested. Let me just zoom just a little bit there. So that's how you need to see your fib. So you can see 50 has quite been retested some few times, going up and down. Can you see? There's a wave here, big one. This was a lot of consolidation. Then the market started buying. Within 50 again, goes down, up, goes down. Within 50 again, goes up. Then now what is it? It's just above 50. Then what is it doing? It's touching 200 moving average. This is simple moving average. So that is to mean this is now our strong support, because it's either this candle starts breaking going down or starts breaking going up. So if I was me, I would be going a little long up to 31 pips or maybe around 57 pips. Where would I put my take profit? 57 pips. Ratio 1:2 or ratio 1:3. Where would I put my stop loss? Maybe around here, just below. So that would be how many pips? 33 pips. So that means ratio 1:30 times 260. 1:3. No, 1:2. So what I'm doing, I'm risking 30 pips to gain 50 or 60, 57 pips, 60 pips. So that means my risk reward ratio is 1:2, because all I need is 60 pips going up and a stop loss of 30 pips. So then now, if I was to combine also this strategy, because on the next class, I'll be teaching you about oscillators. I'll introduce you to stochastic, the waves, overbought and oversold prices, especially the RSI, the one you're seeing down here, 70 and 30. So now what does it say? Every time this red line or this green line comes below 30, that means we are oversold. Every time it hits 70, we are overbought. So what do? You just click a line around here. You can see that was my point where, and you can see there was also a gap around that area. So what happens is when the RSI hits that area, that means we might be going back up around there. If I zoom it in, you're going to see. So just a minute. Yeah, just 1 minute. Where there? Yeah, there. So you can see. So now all I need is this RSI. When it starts going above 30, and that's exactly where we are, we should start at least getting some 30 pips. So day trading is so much fun, because all you need is a good risk reward ratio. So probably 40 pips or at least up to 60 pips. This pay at least you can get up to 60 pips. What about your stop loss? We said you can put it just below, just what I've just taught you, just below your, now here. If you are risking 60 pips, it's maybe here, your stop loss can be just below here. So it's a very, very favorable risk reward ratio, because you're risking 30, 31 pips to get around 60, 57, 60 pips there. So if you do that now, and you're doing this every day, All you need to know is the extension and retracements. Where are we? And just watch the markets. Now, when I combine with the moving average and also the oscillators down here, then you're getting a 60, 70, up to 80% win ratio on a daily basis. So at least can be guaranteed to be making between 40, 50 pips per day, guaranteed very easily, whether there's volatility or there's no volatility. Yeah, so basically that was my lesson for today. I didn't want to have much. All I introduced was Fibonacci, retracement and extension numbers. I've also been able to show you with the Euro USD. H1 is one of my favorite pair on the currencies because I'm usually tracking Europe and the US economy and how basically they are performing in terms of the markets, imports, exports, fundamentals, and the rest. So I'll welcome in questions now because I think I'm done. Do we have any questions? So let me put in chat. Any questions are welcome now. So it's a very, very interesting, topic because I really love fibs because they apply to our day-to-day life. So even you yourself as a person, if you want to become better, you have to keep working on yourself on a daily basis, from your mind to your body, to your heart, to everything. So that is basically a constant change. It has to be spiral. Spiral in a way, the more you do even on this trading, the better you will become. So Fib, it's a very long lesson, but at least I've given you the basics, theory and practical. So, but now we'll be applying it. So we'll be using this same chart even on our training. I'll be using mostly Euro USD because at least you can understand. Then we can apply it on any other chart from stocks, commodities, crypto, anything, even Bitcoin or the rest. We can do that. We can be able to always see what the market is doing. So I think that's it for today. Unless we don't have any questions, I think I can call it a day. So thank you so much for your time. We'll be having the next class on Thursday. So we'll be continuing this, but now I'll be introducing more on the oscillators and momentum. So that at least you're able to be able to understand. So most of the class now will be more practical. So that's why you've seen we've not taken much time. It'll be more practical because theoretically now I'll be giving you more notes. So we'll be having a lot of reading. So the more we read and whatever we are reading is what now we can apply in the markets. So, and then apart from that, I wanted also we check what we have for this week before we leave on our economic calendar. We said we have to always know what's happening. So today is 26th. On October, we don't have much. When it's around medium impact, when it's orange, yellow, it's low impact. When it's red, we have high impact. High impact means there'll be big news that are going to affect this particular pair, this particular currency. This is, for example, AUD. AUD, this is CPI. CPI stands for Consumer Price Index. So all you do is you have to check what's happening, changing the price of goods and services purchased by consumers or the basket of consumers. Of course, it should be excluding energy when you're talking of trimmed CPI. Trimmed CPI, changing the price of goods and services purchased by consumers, excluding volatile 30% of items. So data represent underlying inflation trend. So what we are looking at is an inflation adjustment. What is inflation? Inflation is why the price of bread is at 50 and 3 or 5 years ago probably it was 35. Why? Because cost of goods and services is going up, energy is going up. You know, we have electricity, you have internet, you have roads, all these things cost money. And of course, the value of the currency is not going high. Why is it not going high? Because the purchasing power goes low. That is why TRIM or CPI were able to measure inflation. Then we have monetary policy statement. This will be on card, 5 p.m. This will be tomorrow, Wednesday. Then on Thursday is the big day, BOJ outlook. These are the interest rates on Japan. Then we also have Euro. Euro mostly I'll be tracking it on Thursday because it will be a big day, because we'll be having monetary policy statement, main refinancing, same case scenario, interest rates and all that. Then on Friday, it will be a quiet day, only GDP on card, and of course, core price index on US. So I think that's it for today. Unless there are any questions, I can call it a day. So that's what we'll be looking. This is the economic calendar. We always have to look at what we are doing on a weekly, daily basis. So unless we have any questions, I think I can call it a day for today. So we'll keep tracking our euro. Then we'll be able to see how far we go. But so far, I think this can be a very good entry point between today and especially tomorrow for you to get some good, nice pips. So we'll be showing you more of this because now I want you to grow. We want you to at least be making good trades and also be able to make some good money. So until then, I'll say adios and have yourself lovely, lovely day. So thanks, and let's link up next week. I think on Thursday, same time, same time. So same time, same place. So thank you and have a lovely day. Bye. Okay, goodbye. Enjoy your